Hello. How to file Form 10CC5 and Schedule K1 for 2025 Partnership Return? Well, we have TaskAd software here that we are going to use to file it, and you'll use your own task software that you are comfortable using as well. And you might be in a questionnaire mode, but here I'm going to be in a form mode. That's why I use, but a lot of time by default is going to be a questionnaire mode, and it is okay. But knowing um understanding the 1065 form might help you answer the software question it will ask you, so that you can give the right answer to it. So when we are looking at Form 1065, US return of partnership income is usually filed by LLC owners. If you have multiple partners, so multiple partners, LLC will be required to file Form 1065, and you have partnership, you know, businesses that will file Form 1065. So I'm going to talk about this as an NLC, multi members, LLC required to file Form 1065. So for 2025, so you put your name in the name section, and here we are using business name LLC. Section A will ask for your principal business activity. So if you are a manufacturer, let's say in our case, we sew to sell. So therefore, we are manufacturing product but selling it for end users. So therefore, we are retailers. So here we are going to put retailers. If you provide service, then you will, put your principal business activity there. You can try to brainstorm a little bit on it by going to IRS website, irs.gov, and you can just put 1065 here, and it will give you the form and the instructions. It's good to download the instructions. Oh, sorry. Let me hide the webcam so that you can see better. And yeah, I think that should work. So, and let's go to maybe close to the end, 50. Okay, and you can read about it as well, but we are going to put a code, a business code, and you can read more about it. It's going to ask you to choose the business activity that generates most revenue for you in your business, to choose the code for it. So if you are, let's say you are a task preparer, then you go under service and look for you might probably find it under accounting or so, and you will find 54 12 13 under task preparation service session under accounting. So professional, scientific, and technical services. So if you provide services in that area, you'll go look for that. If you are in transportation, you look for transportation. If you are in educational services, you will be there. And if you are a content creator, you'll be more under information, so you can look under information as well. I hope this is not too small for you to see. So under information, and just look there to see what that would be. So as a retailer, if you don't have a brick and mortar, but you have a non-store retailer, like you sell online, like you have an online business, like the way you and I might have these days, having a job on the side and then having an online business on the side as well. you'll be more a non-store retailer. In that case, it requires, it advises you look for where your business is, what kind of business you are in, and just use that code. So since we are sticking with the retailer, we'll come back to this. So we are going to come back here. Is asking for our principal product and services here, and I just put home and living. We can put home and living products, but because we sell towers, so I just put it there. We can put home and living uh, and digital products. That's one way, but you put your principal products or services, explain it there in a short period of time, or we can write it down and ask AI, how you can summarize it in this, you can just screenshot this area and just ask AI, this is your business activities. How can you summarize it under principal product or service? And put it there. So business activity code. So for business activity code is giving you all the code here so that you can go through and pick. And those tarots are mainly, if we go back to here, those tarots are mainly those tarots here. And once you pick one, it's going to narrow the code for you to pick from. You can go that route or you can go from the code, but I think if you are using a questionnaire mode, it will just ask you question, and based on your answer, the software will pull the code for you. I will think, unless it give you the drop down menu for you to choose. We are seeing retail trade here. If you are wholesaler, you can go there, but we are a retail trade, so we can just come here. You have clothing accessories, and we are going to go under general merchandise there, and it's going to narrow it down for us to 2. And since we use this last year in this example, we are going to continue using that. So when we come down here, this is general merchandise retailer, and we have those 2 there. And in this example, we are using 455110 for department store. We can keep using it, that's fine. Otherwise, we could use the bottom one as well. But let's continue. And I think once you are using a number, you can stick with it. That's my personal opinion though. But as such that I brainstorm on it with AI, AI think it's okay to change it if, because the requirement is by year. The requirement is by year. If your business activity change, it's okay to change the code to match your new business activity where you are drawing more information from. And the idea behind it is because this requirement is on a yearly basis, so there is not a requirement to that's it that you need to stick with one you pick. But again, I think the idea behind this is for IRS to be able to classify your business within the whole businesses that we have in the US or something like that, industries that we have and things like that. So but just be the best judgment for your own business. So but let's stick with that. You'll push your address, your business address, your city, state, and zip code. And in section, so that is section BC, which include the activity code for your business. And then we'll go to section D, employment identification number. So you put your business identification number, and just make sure your business name, the name of your business, is the legal name that you put on your EIN application form. And let's continue here. And when you file your business with your state to have that L.L.C, you are just going to put it here, and we just put 1/2016 here. That is Schedule E, and Schedule F is now a requirement, so it's kind of blank for now. We are going to leave it here. and we'll come to G. So G is asking, is this partner filing an initial return? If that's your first time filing a return for your 1065, you click yes. In this example, we are going to say no. Is this partnership filing a final return? If you think you ended your partnership, like you're not going to continue it again next year or this year 2026, because you are filing 2025 tax return for your business, but you know your business is not going to exist in 2026 and beyond, you can check yes. But hopefully it's not the case. Or if you sold it to somebody and you are not going to have that business anymore, it can be yes. Otherwise, we will say no. So we are going to keep a no. Name change, address change, amended return, we are going to leave a blank because it does not pertain to this business, to this filing. Check accounting method. Are you using cash method, accrual, or other? So we are just going to check cash. And if you don't know what those accounting methods are, you can look it up on the instructions. And when you have you have been asked those questions, or you are using the form and you do not understand something, you can just come to the instruction to form 1065 and locate that step in it and read more about it. But we are going to select cash. So cash is, if I recall right, those are accounting method. If I recall right, is when you pay a bill, when you pay that bill, you will it is an expense that you'll account for. And for accrual, when you are invoice and you know you are going to pay, then you will account for it. That's as an expense. But as a cash, you have to pay before you can account for it. I think that's the nuance between when it comes to expenses. And then you have the revenue side as well, that when somebody pay you, you account for it. When you invoice somebody and you know that person is going to pay you by the end of the year, you'll accrue it or something like that. But there is some sort of nuances between the two. It goes deeper than that. So if you have now picked your accounting method, you might want to look well into those and then you pick, because it's not that you can change it 1 year to the other. I think there is some requirement related to it. So just make sure you pick one that is well suited for your business model and stick with it. But please read more about it in the instructions. It will be more toward the beginning of the form, the instruction, since we are right at the beginning of the form here. So don't quote me on the difference between the two, even though I have a master's degree in account management. Those are things that I don't memorize, I forget, and I'm still working in finance, but again, I don't keep those things in my head. So number of Schedule K1, we are going to assume we have two partners on this business, and then we are going to have two here. So the number of partners that you have, because you are filing 1065, is going to be more than one person. So make sure you add the number of partners that you have. Section J, check if Schedule C and M3 are attached. So we are not going to click on that, but we can go and look a little bit more there. But I don't think you will be required, because I think M3 is more like if you are making in the millions in revenue, and if you are making millions in revenue, chances are your tax return will be more complicated, and you will be very busy managing the business, and you'll have a lot of employees, and you will want to allocate filing the return to an accountant or a tax preparer to prepare it on your behalf, and you'll have a structure in place an accounting department that will be tracking the financial data in an accurate way for that to be handed over to who is going to file the return for you. But let's go to, but if your business is simple, is young, you will be able to file that on your own. But filing your own business tax return, keep in mind that it is time consuming, and it allows you to learn what kind of financial data you should be tracking so that you can make it a little bit easy on you or who is going to file the return to have the information needed to file it accurately for you. So is this area here for asset session that is not required here for young businesses. But for schedule M3, they say if the total asset at the end of the tax year reported on schedule L, which is a balance sheet, pretty much if your total asset is 10 million or more, you are required to file schedule M. So I'm now seeing schedule C here, what that schedule C is about. So any partnership that files schedule M3 might also complete and file schedule C, form 1065. So therefore, if your total asset for the business is not 10 million, you don't need schedule M3. So therefore, we are now going to check this box. Check if the business entity is a specialized service, trade, or a business. So we are checking this is for the QBI information, a qualified business information. So then we are checking that and check if partnership is going to aggregate activities or group activities. This one for passive, and we are just going to leave them. When you have multiple business activities under one umbrella, one business, and you want to aggregate them, you will track those. But if you have passive activities and you want to group them, you will track that one. Otherwise, we are just going to leave them like that. So additional information is not a tax shelter, and that automatically the software will put where this form will go for you. And we are going to go down and we are going to reach the income section here. So a gross receipt or sale. So if you are in a service business, you will put your gross receipt on line 1. But since we are in a retail business, we are going to go to our financial data here, and we are going to go to our cost of goods sold, and let's see here and find our total gross receipt here. Let's copy this number and go paste it there. And it's asking if you have a refund. So if you have a return or a refund, you will have that. And we have 1999. We are going to go to it, and it's going to subtract that from our total gross receipts, and we are going to have the gross revenue here. So now a cost of goods sold is going to be on form 1125A. So, and because we used this example last year, we have information in it. It pulled last year and like 2024 end year inventory to be 2025 beginning year inventory for us. So we are going to click on that folder to go to form 1125A, cost of goods sold. So how do you complete that form? So that form is going to be like the beginning of the year 2025 is going to be, this number. Let's see if that's the same number we are using here. So yeah, we have that. And we are going to go back to it. That is line 1. So that is inventory at the beginning of the year. If this year is your first year in business, that line 1 is going to be 0. Line 2, total purchases. So if you purchase product during the year, you are going to put that on line 2. Here, we didn't purchase any, but we move raw material from inventory, and we make finished product and put it back in inventory. So out of inventory, we have the negative number, putting it back in inventory as finished product at the cost we pull it out of we pull the raw material out of the inventory has a positive there, so they wipe each other out. So purchases during the year is going to be 0 for us. We just have in and out transaction between the inventory, raw material out, finished product in. I like to track it like that for our business. So I'm just going to use it in this example. So since we didn't purchase anything raw material wise to put in inventory, our purchases for the year is going to be 0. Cost of labor, we are not going to allocate any labor to inventory to inventorize that labor. So therefore, we are going to leave line 3 0 as well. So line 4, we are going to leave a blank. Cost, other costs, we are going to leave it alone. And line total for line 6 is going to be line 1 all the way to 5. In this essence, is 8310. Line 7 is inventory at year end 2025. We are going to come down here and we are going to copy that number, and we are going to put it there. So automatically it's going to do subtraction between the two and give us cost of goods that were sold during 2025, which is 470, and is going to take this and put it on the form 1065. Now line 9 is asking what kind of method did you use to evaluate your closing inventory. We are just going to say cost here, and we are not going to do anything there. And if this return to you, you might check it, but I'm not going to check that. Was there any written down for subnormal good? I might just say yes. If there is any subnormal good, then there will be a write down for it. So I'm just going to check yes, but you can check no, but that's the way I understand it. So was the LIFO inventory method adopted for this year? The answer is no. And LIFO means last in first out. If you purchase some products in 2024 and you purchase them in 2025 at different prices, and then you sell in 2025 the first one that you sold, you need to use 2024 costs for what you sold in 2025 until everything that product that you purchased in 2024 you sold it all before you start using 2025 costs for the one you purchased in 2025 costs. So that would be first in first out. If you use last in first out, so that means the one you purchased in 2025, that cost is what you allocate as cost of goods sold. When you sold in 2025, you sold 2025 one first before you sold 2024 one. So that is last in first out. And if you are using last in first out, there is more requirement to it. So by default, first in first out is recommended, and I'm going to assume that's why this business is using. Therefore the answer is no, it's not last in first out, but it's FIFO, first in first out. So but if you are using last in first out, then you might want to read through it and check it. So is this property, if property is produced or acquired for resale, do the rule of section 263 apply to this entity? If yes, you check yes, otherwise you check no. Were there any change in determining quantity, cost, and valuation between opening and closing inventory? The answer is no. That just means end of 2024 and beginning of 2025. That 8310 needs to be the same. If it change, then you explain why end year and event and begin of the year inventory change, and click yes there. For this 263A, we can check Form 1125A. It has instruction on there for you to read to see if it matters to your business. Okay, so see the instruction. So a small business, you can just read it. So this section here, a small business taxpayer is now required to capitalize costs under section 263A. See the discussion on section 263A uniform capitalization rule in the instruction for your tax return before completing form 1125A. And then they have this here. So that means it should be in the instructions for it should be in this area they are talking about, but so far I'm not seeing much of it. Well, pretty much it's about capitalizing costs here. If that pertains to your business, you might want to search more and read about it. And right out of that, I'm not seeing much information on it here, but it's worth skipping as quickly read through the instruction and highlight things that you find interesting that later you can go back to if you wanted to reread it as you need that information. That's why it's good to save that form, and so that you can save your highlight, that instructions, that you can save your highlight for you. And as you are filing the return, the software asks you a question you are not sure about, you can read the instruction to see what the instruction is saying about it. But again, you might understanding the form allows you to know that the question you have been asked, where in the 1065 form that answer is going to be able to look it up in the instruction to see, to understand it more. But again, it's because I use the form, that's I will say that. But if you are in the questionnaire mode, you may not know exactly what question is going to where on the 1065 form, but you can just do the best that you can. So gross profit is going to take the revenue minus cost of goods sold, and we'll have our gross profit here, 1986. Ordinary income here. So if you have ordinary income from other partnership, estates, trust, and you got a Schedule K1 from it, it'll go there. If you have other ordinary income or loss from foreign partnership or here, you'll put it there. Here we are just going to leave those area alone. So if you have profit or loss from farm, is going on line 5 here, but we are going to just go through those because we don't have those included in this example. Net gain or loss from form 4597, line 17 will go on line 6. So I think those are more like if you sell assets. So we are going to go to this area to see if we can find line 6 here. So that is the sale or exchange conversion of assets. So if you have assets in your business that you are depreciating, or you claim 179 for super, or you depreciated, or you are depreciating and you sell it, so that proceed from there. That's what they are talking about. So you can read more about it to see if it pertains to your business. Otherwise, you can just you can just leave that line alone. Line 7, other income or loss, attached schedule. So we are going to click there and go to that folder. As we went through those lines, there is not much there for some business that you and I, business owners, have that were there for us to put those on. So we are going to go to under deduction here to see what we have here. So here is putting depreciation recapture. So pretty much for federal form 4797 per V. So pretty much if you claim an asset that you bought it during the year, and you claim section 179 and deduct it pretty much in full, but you didn't keep it for the number of years you are supposed to use it because those are depreciable assets, and you took it off service quickly within a few years, you know, didn't go through the whole depreciation number of years you're supposed to use it. That early depreciation that you took, let's say you use it for 2 years when you're supposed to use it for 5 years, those 3 years, remaining years, will be recaptured on this form, and they're pretty much what they are saying that will go here, if I understand it correctly. But we are just going to go through it, and if you have income from form 1099, so if somebody gave you 1099, income from it is going to go on line 6 here. We are under deduction though, so I'm not sure why income from form 1099 is going to be here. So income from 1099 technically should be under gross receipt. Let's go back. We'll go back. Oh, okay. So here we have worksheet 1099 other income. So when we click on, what did we click on again? So we are under income here. So that is why we will have this recapture here. And 1099, you receive 1099 income from 1099, so we'll go on line 6 here. And if you have core award or things like that, state tax refund and things like that, will go under here. So we are on the income section here, but I thought we will be in the deduction. So let's go back. Okay, we are still in the income, so that makes sense. So other income or loss, that is where that will go. So we just, sorry, 1099s will go there, and that way it will show up under other income for you, and this will give you your total income or loss. And here is 1986 for this example. Now we are going to go to deduction session. So deduction sessions, salary and wages other than to partners. As a partner of L.L.C, when you work in it, you are not paying yourself. So therefore, if you hire other people to work in the business, wages you pay them will go on line 9. So we are going to go here, and we are going to go here, and we are going to use this as just like people that got hired that are working in the business for you, not the partners. When it comes to L.L.Cs, that file 1065. So we are going to copy this number and go put it there. And that is before tax were deducted in the income. That's the gross revenue, the gross payroll there. On line 9, we'll go to line 10. We don't have anything for line 10. We'll go to repair and maintenance. So if you have repair and maintenance, you'll under line 11. Bad debt will go on line 12. Rent, if you are renting a place, it'll go there, and otherwise you will leave it alone. So tax and licenses. So here you have state and local taxes. So you will put it there, and payroll taxes. So since we have payroll here, we will put payroll tax here. This one is before tax, so that include employee portion of Social Security and Medicaid. If so, here will be employer portion of Social Security and Medicaid and unemployment tax that you, the business, paid to unemployment service. So we are going to look for that tax, and let's remove this out of here. So it's going to be 17. Let's just copy it, and we are going to put it there. So, and we will continue. So total tax and licenses will be here. So I'm going to say something here. So if you are selling products, at least that's the way I do it, and that's the way I understand it. If you are selling product, like in the example that we are our business, we sold to sell, and sales tax is not included in this gross receipt here. Is out of it. So if you are selling on Etsy or eBay on your own website, sales tax that eBay and Etsy collected on your behalf, you do not include it in this gross receipt. And when you are selling on your own website, taxes that you collected from people within your state buying from you that you charge tax to, is not going to be included in this gross receipt here. So therefore, tax that you remit to your state, you collect on your website from people buying from your state, in your state buying from you, when you file your sales tax with your state, and you give them that sales tax that you collected, you are not going to put it here because it's not included in this revenue here. Just keep that in mind. But if you include it there, then it might make sense to include it here. But during my research some years ago, I think it is recommended not to include it in the gross receipts. Therefore, it's not a deduction here to take either. So here we are just going to put payroll tax and move forward. Interest. I think we have credit card interest here, 372. And we are going to just put 3.72 is going to round it for us. So depreciation. So depreciation, we already have prior year assets in the system. So therefore, it's pulling the right depreciation amount for us. But when we click on that, it's going to take us to Form 4562 depreciation and amortization. And that should be on Part 3, line 17, because it's prior year assets. No asset was purchased in 2025. If so, that will go on Form 4562, depreciation and amortization, Part 3, line 19 area. So if you have any asset purchased in 2025, you will be required to attach Form 4562 depreciation and amortization, and by default, the website, if you this tax software that you are using, if you qualify for Section 179, is going to help you claim Section 179, and depending on the asset value or cost, you might take the full deduction for 2025 that you purchase it and place it in service. Otherwise, there is special depreciation allowance as well, that if you qualify for it, it might take the rest there. By the time it's to Part 3, there may not be anything left to depreciate. So by default, it might try to take the highest depreciation for you to decrease your profit for you. And if it flows all the way down to depreciation section that you will take any depreciation, chances that it's going to take the highest depreciation for you as well. If we just click here and go to any example here, it will try to claim the highest depreciation, Marco 200%, but I just like to stay with a straight line, Marco straight line. So we are not going, I'm just showing you those, but that asking you question if you purchase and place an asset in service in 2025 know that that question, the software is trying to find information to complete depreciation sheet on your behalf for you, and where that will go. Prior years will go on part 3, line 17, and current 2025 assets will go on part 3, line 19, if it didn't take full depreciation under, it isn't expensive for you under section 179. But either way, when you place an asset in 2025, depreciation and amortization form will be completed and attached to the form. But in this example where no assets were placed in service in 2025, it's just prior year assets, is going to be under line 17, and this depreciation sheet is not a requirement. So, but that 707 is coming from last asset placed in service prior years, and the depreciation deduction for 2025 is what that is there. And we can go to our depreciation deduction example here, and for 2025 the depreciation amount that is claiming for us is 707. So when you are tracking your assets, you'll be able to see if the software is doing the calculation well for you, depending on how you are claiming your assets. But is there. So we are back to our 1065. So it's asking if there is a depreciation reported on the cost of goods sold from 1125A to enter it there, and but we don't have any. So therefore, that way is good. Do some subtraction here because you already put it on form 1165A to inventorize it. But since we are not inventorizing anything there, so depreciation deduction for the year is 707. Line 17, line 18, well, we are going to assume we don't have retirement plan here to put anything there. Employee benefit program, we are going to leave a blank here. That line 20 is going to be blank. So we have other deduction, line 21. So you'll notice that, regular business owner might have advertisement, might have shipping, supply expenses. I'm not seeing any of those line here. Chances are is on line 11, other deduction section, and anything goes there, there will be an attachment to the statement. So when we click there, it will open a folder for us, and as you see, it has accounting fee, advertisement fee, amortization will go under this section, bank fee. So if you are tracking those, you have those expenses, that is where it will go. Commissions that you paid will go there as well. Contracted services and independent contractor, that's good to know where independent contractor expenses will go, is putting it under line 6 for you. So if you have people if your business is using contractors, now employees, or both, you see where we put the employees, that 217 for people you employ, that's for employees. So independent contractors will go on line 6 under deduction section. It might be worth making a short video to just point that part out, where you put contractor expense on your 1065 is under deduction section, but that is that, and line 6 they just have there for you. Credit card convenience fee, okay, is going there. Gift is going there. Insurances for the business, so if you have this cleaning services there, legal and professional fees will go there. Just keep in mind though, if you are using a contractor, you are paying lawyers. If those are more than 600 or more, you are supposed to give them 1099 NEC. So make sure you complete 1099 NEC with IRS and give copies to those professionals. so that they can file their business return as well. And you have those areas here. And line 13, organizational costs, and they have those postage will be here. And I think we have an organizational cost and startup cost, excuse me, is more so for first year. If it is first year you are in business, you want to read more about it. Depending on the amount, you could claim the full amount the first year for organizational costs, which will mean more like when filing for those L.L.C with the state and all those, and startup costs, those first year costs, to start the business. But it's good to read more about it to see if there is a threshold. Okay, even have some folders there for you to put information in it. I don't know if your business is new, it might be worth checking, because anything that is not deducted will be amortized. And we have an example here for amortization here, but this was done for another asset. But anything that is not fully claimed as a startup cost on that other deduction for the first year will be amortized, I believe for 15 years or so, but I'm not in that, or 5 years, I think it's 15 years. But it has sessions here. Let's just go back to where we came from, as well as the organizational cost. Those two, when they are not claimed in full the first year you pass the threshold, is going to be amortized for a certain number of years, and I believe it's 15 years. But 180 months, if, again, I don't like to memorize those things, but because I know that I can search it in the instruction for 4562 depreciation and amortization has that in it. And trying to search those, filing this form might make this return longer. But if that is your first time filing for your business, chances are you will have those startup costs that you'll have to face. So it is worth knowing, and that information will be more toward the end of it under amortization. Session. Here. And I thought it's going to give me those sessions. Let's see. It has, because when you are amortizing, you put the session that it is for. So we are going to just look for startup costs, amortization. You have intangible session here. Those things that if you purchase it for your business, or you have it for your business, license, permit, and patent, those will be amortized, now deducted as an expense, and for 15 years. It should be at in the same area. Here, I don't know if it is too small for you to see it, but you can elect to amortize the following costs for setting up your business. So business startup cost is section 195, organizational costs for a corporation and for a partnership, which would be for 1065, will be section 709, and they have information here. So for business startup costs and organizational cost pay or incurred, you can elect to deduct a limited amount of that for the year your business begins, you are now required to attach a statement to make this election. But once made, this election is irrevocable. Any cost not deducted currently must be amortized for 180 months, and the amortization um, the amortization period start with the month you begin business operation. So, and that is section 709 for that. And I say to, yeah, so, and yeah, you can pretty much read, but I thought it has a limit for the amount you can deduct the first year, and anything over that will be amortized. But I'm not seeing any dollar amount here. But again, do your own due diligence to see if there is a limit. But if you are using the software, I will assume the software should be able to help you out by knowing if you can claim the full amount on the deduction the first year or not. So supply. So first we have postage here. So let's come back to our bookkeeping session here, and things that we use already, we can take them out of the way. So, and we have postage for 1386. We'll go back there. Where is postage here? 13.86. When you ship product, if you want to put it there, you can. If you have professional due and subscription that your business is paying for you to for your profession and your role in the business, you can put it there. Reimburse employee expenses. So if you working in your business and there are some expenses that you get reimbursed for, do that under accountable plan so that you can claim it here as reimbursed employee expense. So it will be maybe you are running your business from home, and electricity and gas and internet, a portion that you want to allocate to your business based on the square footage office that you are allocating to your business. You can claim those expenses as a reimbursed employee expense. So it might go under accountable plan, and it might go there. Or if you are using your car to drive around for your business, you can use the standard mileage that I raise every year, and use that to pay yourself under accountable plan, and it will go under reimbursed employee expenses. Lunch is seen here. And we have supplies. So we are going to go back and see if we have some supply expenses here. We have packing supplies for 1306. 1306. We have telephone here. So if you have telephone for the business, it will go there. Meal expense, so 50% will go there for business meal things. So, and travel and non-entertainment meal expense. So pretty much you might read about it and put those things there. You have utility. So if you rent a place and you have utility bills, it'll go there. So vehicle expense detail, you click there. Chances are you are going to have a folder to enter your business information there. So it'll go under listed property area, but we are not going to have that'll be part C here, business vehicle information related, and those things need to be written down to be claimed, and including what you are using for personal use and business use will go under listed property section. And but we don't have that. So, and then you have blank place for you to put in. So I'm going to put biannual report, report that some states require you file for your LLC on every 2-year basis or every year basis. We are going to enter that there. we have platform fee. If you sell on eBay and Etsy, and I'm going to put getaway payment. If I don't want to summarize them under platform fee, I can just put getaway payment. Then we can go back and see PO Box fee. I will say PO Box renewal. And we will go back to see what else we have. Website fee, domain and hosting registration and renewal. And we can just say domain, why not, and hosting renewal. Okay, and I think shipping orders. Okay, if we want to keep it away from postage, why not, we can add it. So if there is more, we might come across it, but until then, let's put the first one, that is 30. The second one is going to be eBay SC for this amount, $179.97. So banner report for 30, platform fee for $179.97. I'm not sure, is it what we saw? $179.97, $179.97. So getaway payment, which is PayPal and Stripe, for $72.32, and PO Box renewal, which is $78. We can copy this one and we'll go for PO Box 78, and this one is what we copy, and we'll come back here and oh no, it's different. This is a software software, so we need to copy this amount, this, go back here and put it there, and let's copy this and put it here and go back. And then we are going to put it back here and hosting renewal. Okay, so we are going to go back, and for hosting we have one, no, that's this amount. So this is recurring fee for software, and this is domain registration, and then we have shipping orders, and let's see what the total is for us here. $14.25. So we'll go back and see if we have $14.25, starting from here all the way to 30, and that is $14.25. That's accurate because here we have other expenses. So $14.25, that is those other deductions that didn't have a space on the 1065 but was grouped under other deductions. So it's line 21. Now line 22, total deduction is going to be the subtraction between the gross revenue or the gross profits minus the payroll, minus payroll tax, minus interest, minus depreciation, and minus other deduction, Something is not okay. Oh, that is total deduction. So sorry. So that would be here. Okay, so total deduction is going to be payroll plus payroll tax plus interest plus depreciation plus other deduction, 2,371. And total income or loss is going to be the gross profit, line 8 minus line 22, total deduction, and that gives us a loss of 385. So we can go back here and see our total deduction here, 2371, 2371, and the difference between this and the gross profit is negative 385 here, rounding issue here, but yes, 385. Now we are going to continue down. It's asking about tax here. So here we are going to leave a blank other taxes. If you don't have any other taxes, then it's going to be blank. Otherwise, there is those areas there. Elective payment, election made from Form 3800 payments. We're going to leave those area blank. Amount owed, we are going to leave those. Overpayment, we are going to leave those blank. So that is how we file Form 1065, and that is one part of this video. And if you are a tax preparer and you and your client want IRS to discuss this tax return, specific tax return with you, then yes will be checked, and this one won't be checked, and your P10 and business information as a tax preparer will be in here for the pay preparer use only session. But when you are filing for your own business, this area will remain blank, and that's why those areas are checked as well. So we are going to save our information here, and that is 1065. Now we are going to move to Schedule B under information. So for Schedule B, one, what type of entity is filing this return? Is a domestic limited liability company. So we check that. If it's a partnership, then it will be D. But here is C. 2, at the end of the year, did any foreign or domestic corporation partnership pretty much own 50% or more profit or loss of capital? I'm not reading it well. But did any domestic or corporation own 50% or more of this, partnership? The answer is no here. If it's yes, you have more form to fill out here. Did any individual or estate own directly or indirectly 50% or more profit or loss or capital of the partnership? So any member of the partnership own 50% or more of this company. If yes, you check yes. We check yes for this. So that means we need to go to Schedule B and complete it here. So this is for that first part that we saw, and this will be for the partner that own more than 50%. So I'm going to come here and let's go look for those partners. Here we have partner 1. Let's open it, and partner 1 okay, partner 1, I just call it partner 1. That's the partner 1 first name, partner 1 last name. Okay, and So pretty much we are not going to do much here, but it brought us here for the partnership, and here is schedule K1 though, but that is where it wants us to make the adjustment here. So let in this example, let's make partner 1 0.75 ending 75, and partner N 0.75 0.75, and let's keep it like that. Let's see where it's taking us here. Okay, that is, let's go back. Okay, so, and we can check partner 2, and we will go all the way down. So partner 2 is going to be 25, 0.25, 0.25, 0.25, 0.25, 0.25, 25% for partner B, and partner A 75%. So now that we did those, let's go back. Okay, so on here, only one partner owns 50% or more of the business. So it's showing that person's here for us at 75%. That's all this schedule B1 is required from us. Let's say that change. So that's that. We are going to go to 3 at the end of the task year. Did the partnership own directly or indirectly anything from foreign or domestic corporation? The answer is no. If it's yes, your answer will be different from mine. B, own directly or indirectly profit or loss from any domestic or foreign partnership. The answer is no. If yours is yes, it's going to be different. So 4, does the partnership certify all 4 of the following? The partnership total receipts for the tax year. Total receipt is pretty much here. Gross receipts, yeah, gross receipts. But let's go back. Okay. Total receipts. Well, less than 250,000. Keep in mind that if you go back, we have other income as well. Section there though, we have other income section here, so it'll make sense to see total receipt they are talking about, if that is line 8 or line 1. So if you are not sure, again, you see how we are doing it. Assuming I have let's go back to 1065. I shouldn't have got out of that that instruction, since we might refer to it quite a bit. But schedule B, okay, schedule B, question 4. You see how, not knowing the answer, we came to find it in the instructions. I'm looking more to what they are calling total receipt here, but it doesn't seem to be explaining it to us. But just keep in mind that the highest of those two, just use that. Total receipt is defined as the sum of gross receipts and sales. Okay, they put it here. That's good to know. So, things like that, you can highlight it for your reference later if you don't remember. So it's line 1-8. all other income, page 1, line 4 through 7. Okay. And income reported on Schedule K, line 3, A5, 6, A7. So you have to do some calculations. And income and net get reported on Schedule K and those. So you are going to do those calculations to find your gross receipt. So it's not just that one line A, it has those other lines and Schedule K, because with this 1065, active business activity will go on page 1 of 1065, income and expenses. But if your business is considered as a passive income, it's going to go on Schedule K. Your income and expense will go on Schedule K, and 1065 will remain blank. But we are completing 1065 as an active business. I think when we get to Schedule K, I will explain myself again. But remember, do you see? Only trade or business income and expenses on line A through 23 below. Trade or business income and expense. That is why we will go on 1065 page 1. Okay, so what will go on Schedule K, straight to Schedule K without touching 1065 page 1. We will come to it when we get to Schedule K. So let's come back here. So we know what total receipt is. And the partnership total asset at the end of the year was less than 1 million. So they say if your total gross receipt is less than 250,000, your total assets is less than 1 million. And again, total assets will be your balance sheet total assets. And then you will click that if it's more than that. And Schedule K1 are filed with the return and furnished to the partner on or before the due date is yes. D, the partnership is not filing or is not required to file Schedule M3. We came across that before, 10 million requirement. So the answer is yes. If all 4 are met, the answer is yes. And if it's yes, the partnership is now required to complete Schedule L, that is the balance sheet, Schedule M1 and Schedule M2 of and item F of page 1, which is the total assets section here, is not required of page 1 form 1065 or item L on Schedule K1. Item L is this area of schedule, pretty much the capital account for each partner, tracking their capitals and earnings is not required to complete. So let's go back to our Schedule B. So our answer here for a new business, like a young business, is yes. So if it's yes for you, you check yes. If it's no, then you check no. So let's continue here. So the software is asking if the answer is yes, and you are not required to complete those, but you still want to complete it. To check yes, we are going to keep a no. If it's not required, we might complete it, but we are not going to attach it when we are sending it to IRS. So but complete it just for the business record. So is this partnership a publicly traded? No. During the tax year, did the partnership have any debts? No. Cancel? No. So has the partnership filed or is required to file a 918? No. At any time during the year, did the partnership has an interest in or a signature on with foreign country? No. At any time during the tax year, did the partnership receive a distribution from? The answer is no. Is the partnership making or had it previously made or revoked? The answer is no. I'm not even reading it completely. And you have B, For this year, did the partnership make an optional basis adjustment? No. But again, if it's yes, your answer is going to be different. C, did this year, again, by this year, they're talking about 2025 that you are filing for. Did the partnership make an optional basis adjustment under this session? The answer is no. D, for this year, is the partnership required to adjust the basis for partnership property? No. E, is reserved for future use. Check this box if during the current or prior year the partnership distributed any property received in like kind exchange. The answer is no for this example. At any time during the year, did the partnership distribute to any partner a tenancy in common? The answer is no. Is the partnership required to file a v78? Then you'll put the amount there if it's required. 14, does the partnership has any foreign partner? In this example, the answer is no. Line 15, enter the number of ADA 65 related to foreign partnership. We are going to leave it blank. Did you make any payment in 2025 that will require you to file Form 1099? If yes, you need to check yes. Otherwise, no. Remember, 1099 is required if you pay $1,600 or more to a lawyer or to a contractor. If yes, did you or will you file 1099 on time? We can just say yes for this one here, no for the first one, yes for this one. And again, 1099, we do have a video on that, 1099 NEC, how to file it, how to e-file it for free for your business. We have a video on that, and it will be in the W2 W3 playlist, but it's there, and I will put that playlist in the description of this video for W2 W3 playlist. So line 17, enter the number of form. Since we don't have any, we are going to leave that one blank. Enter the number of partners that are foreign government. We are going to leave it blank. 19, during the partnership last year, did the partnership make any payments or receive any payment? No. Was the partnership a specified domestic entity required to file a 938? No. Is the partnership a Section 71 partnership? No. During the tax year, did the partnership pay or accrue any interest or royalty for which one or more partners are not allowed a deduction? No. Did the partnership has an election under Section 163, any real property trade or business or any farming business in effect during the tax year? I'm just going to say no here. Does the partnership satisfy one or more of the following? And again, if this line 23 is ambiguous to you, again, you just come here to here and let's look for line 23. Here, and you can just read about it. So if you make an election, they say to see instruction for Form 8990 here. If you are electing to exclude it, you answer yes. If you make this election, you are required to use the alternative depreciation system. Okay, so that pretty much is, because we have the macro for depreciation, you have the alternative depreciation system. So that's pretty much what that election here. So chances are the answer is going to be no. But again, you have that. So let's come back here. 23. No. Does the partnership satisfy one or more of the following? The partnership own a pass-through entity with current or prior carryover excess business interest expenses. The partnership aggregate average annual gross receipts for the past 3 years is more than 31 million. The partnership is a tax shelter. So if any is a yes, if you satisfy one or more, you will click yes. Here we are going to click no, but they say if it's yes to any, complete Form 8990. So 25. Does the partnership intend to self-satisfy a qualified opportunity form? We are going to put no. Enter the number of foreign partner. We are going to just skip that one. At any time during the tax year where any transfer between the partnership and its partner subject to disclosure, we are going to say no. Since December 17, did a foreign corporation, we are going to go through, since we are not doing business with a foreigner, a foreign company. So is the partnership required to file 7208? No. At any time during the tax year, did the partnership receive an award, again, in relation to financial or related to digital assets? If that's yes, you'll click yes here. But the answer is no. But read it later. Again, in this day and age that we have those digital assets, digital currency that people use. I think that's what this area is about. Again, line 30, we can just come here and see what that is about and read more about it as well. Those digital currency, virtual currency, if you do business and interact with those, you receive and dispose. That is what that line is about. You can read more about it. And that is just this page 30 of instruction to Form 1065. But we are going to just keep a no. Line 32, check this box if an election out of subchapter K is, we are going to say no. Is this partnership electing out of the centralized partnership added? The answer is no. So if it's yes, they say to complete part 3. We are just going to keep it no. So if no, complete the designated partnership representative area here. So here you are going to put your name. Here we are just going to put, it's not going to be the tax preparer name, but it's going to be you, the owner of the business, or the main partner, or the responsible partner, or the who is representing your business. And here we are just going to put P1 partner. Oh, P1 is the first name, and here we are going to put partner for the last name, and name of, and the address of that person is, let's just put this, and you put the phone number of that person, and we can just put why we are all the way up again. Let's change it a little bit so that it does not look like the EIN, and then the zip code, that we can just complete the city. I think it's using something like, let's do this again. Okay. Okay, that's what we are going to use in this example. If the who is representing your business is an entity, then you'll complete this session. But if it's a person, you'll complete this top session here. So, and I'm not going to check anything in here, but you can read it, to see if that pertains to your business. And I'm going to save that, and Schedule B is done. So now we are going to work on 1065 Schedule K. So your revenue, your profit or loss from page 1, line 13, will flow straight to Schedule K, line 1 here. Income, ordinary business income from page 1, line 3, negative 385 will come here. We do have this session here. We are going to just leave it alone. But if your business, if you are not in a trade or active business, then your income and expense will go straight to Schedule K instead of going through page 1 first and bringing profit or loss to Schedule K. You will put income and expenses on Schedule K straight and leaving income and expense section of page 1 of 1065 blank, and completing the information section only for it, and then completing Schedule B, and then go to Schedule K. But because we are in a trade or business, active business, we have active business activities. That's why our income and expenses went on 1065 page 1, and the profit or loss came to Schedule K. So if you are in a rental property business, a lot of rental properties owners might have LLC for their rentals, you will complete Form ADA 25, and the profit or loss from there will come to Schedule K as well. And this is Form ADA 25. We are going to go through a little bit since a lot of business owners might have filing 1065 could be real estate owners as well. So you might want to read through it, but here you'll put your property name, your property address, again your business notification numbers are there. And this form is for partnership and S corporation that in a rental property business. You'll put your address there, and the rent income that you collected during the year will go in. Other income related to rental real estate activities will go on B, and the total will go there for you. Advertising, so if you do some advertisement for your rental property, those are expenses. It'll go on line 3. Auto and travel, so vehicle lease, if you lease vehicle, auto expenses, it should be good to track those trip to your properties. And other auto and travel expenses will go on C. The total will go there on 4. Cleaning and maintenance, so between tenants, if you go and clean the property, or you pay for carpet shampooing, or company to shampoo the carpet before new tenant move in, and or things like that, or just to cut tree downs on the property, or mowing between tenants, those will go on line 5. If there are some commissions you pay, will go on line 6. Insurance, you will go on line 7. Interest that you pay will go on line 8. They say to see instructions. So if you pull from ADA 25, every single line there will have information for you. So any legal fees will go on line 9. Real estate taxes that you pay for the property will go on line 10. Repair, whether you change the locks or you fix something that a tenant that broke, during when a tenant was leasing the place, they move out and you need to do some repair, or clog to sink. A tenant call you and you call a plumber to fix, or you fix it yourself, but you went and bought some parts. Those parts will go here, but now you are not going to pay yourself a labor there. But if you call a plumber, yeah, you have those repair that will go there. Utilities that you pay between tenant will go there as well. Wages and salaries. Okay, so if you are hiring people, then their wages and salaries will go on here, because again, remember, your rental activities are not going to go on page 1 of 1065. It's going to go on ADA 25. So that's where you are going to track your expenses and your income. So it will go on, your paying people will go on line 13 if they are your employees. Then remember to file W-2s for them and with Social Security Administration and give them a copy. So depreciation, for the property will go on line 14, and other deduction attached Schedule A. So and is will go there. We can click on that to see. Okay, so what that is, but they have a good amount of expenses listed here for you to put, to find a spot to include expenses, so that you don't have to attach anything here. And total expenses is going to be from line 3 advertisement all the way to 17 will go there. And then income or loss will be the difference between the rental income, line 2C, and line 18. The difference between the two will give you your profit or your loss. So, and then we have, okay, total all other rental property estates. So total gross rents and total expenses, they will come here for one of them will do that. So let's come down. Oh, here is the Schedule A. So for other deductions that they are talking about, they have ground maintenance. So like cutting trees, mowing, I think it will come down here to the ground maintenance section here. And owner association fee, HOA, will be there. Incentive fee, landscaping. In fact, you have to choose there. Landscaping, leasing, lease employee expenses, and management fee. They have a spot for the other taxes, prepayment penalty, and reimburse wages and salaries, and tunnel services, and turnover expenses, amortization, deductible startup, deductible cost, organizational costs. So those will be the first year that you start the business. Those expenses that you can deduct before it become an amortization, things will go there as well, and this will be attached to it. So, and that's what this other deduction attached Schedule A is about. So, but then we have this. So that means this is for each property. So, and that will be here. So that means you are going to name this property 1. Let's say you have 2 property, you'll have property 1, you'll have property 2, and on one of those Form ADA 25 is going to total all the gross receipts from all those properties, Form ADA 25, and put it on 28, and put all the expenses as well from 3 to 18, and put it on 20B. That's the way I understand it, and anything else as well. And let's go down here, and then it will put what name of the entity begin here. Okay, identify below the partnership estate or trust from which net income or loss is shown on line 22A. So if you complete this session, net loss from rental real estate activities from partnership estate and trust. So those will go on here, and if so, you'll put those here as well. And then when we come down, line 23 is net rental real estate income. So it's combining line 20 and line 22. So line 20, hold on, line 20, that is the rent. Line 20A, line 20B. So line 23 is combining line 20A, line 20B, line 21, and line 22A is putting it here, and that will be the net rental income or loss. So, and that means the expense should come out of it already. Line 20 through line 22 are totals from all rental real estate properties. So that means it's going to be, well, if you have totals rent from all the properties and you have total expenses from all the properties, like line 2C and line 18 from all the properties, you total them and put it on line 20 and line 22, line 20B. You need to do the difference between the two to, to put the profit or loss here. So it's a little bit confusing here, but again, since the software is going to be doing it, if it's going to just bring in line 19 from all the properties for you, it's going to be putting it there on line 20 here. But anyway, and enter the result here or there, unless, but just know that the form is going to be for each rental property. So show the address and type of each rental real estate property. For each rental real estate property listed, report the number of days rented at fair market value and the number of days of personal use. So this is per property. So if you have multiple properties, you'll be doing multiple ADA 25 in my opinion, but one of those forms is going to have the totals combined on line 20, because they say line 20 to line 28 are totals from all rental properties, estate properties. So I think it's going to combine all those ADA 25 you completed for each properties and have it there, and then the difference between 20A and 20B will be on line 23. That's the way I understand it. And from here, this will go on your Schedule K. So that is how your rental property activity will be recorded, and we are going to come back to Schedule K, and that profit or loss will come here and will be on here on line, will be on line 2. Net rental, you see, net rental real estate income or loss is the income or loss, like the profit or loss that will come here, not income and expenses, but the profit or loss from it, that will be here from that line 23, from Form ADA 25, that will come here for all the properties. The profit or loss from it, that will come on line 2 here. And then if you have other rental income, it will go on line 20. The gross income will go on line 3A, and the expense related to it will go on line 3B there. And other net rental income or loss will go there. But now we are going to so this is real estate. This could be any other things you are renting that is not real estate. So, and if you have guarantee payments, you have section B for it, and interest income. So if you got interest income, like you have money in a bank, in a saving account, you earn dividend on it, it'll go and other interest income. So whatever that interest income, if you receive a Schedule K, then you'll put it there. But again, if you are in questionnaire mode, the software will do those things for you, ask you question and complete those forms for you. If you are in the form version, then you will know where to put your things depending on the software you are using. And dividend equivalent, they have this session for it as well. So a royalty, if your business is earning royalty income will go on Schedule K. Depending on if it's related to passive income, it will go on Schedule K. So, and you'll put the royalty income there, and if it's related to rental, royalty related to properties, it'll go out there instead. And then expense related to royalty, you put it elsewhere, we'll come to it. So, and then you have those capital gain here, and then you have those recaptured here and other incomes that are here on Schedule K. So deductions. So if you play asset in service the first year, and you are going to claim section 179 expense, is going to go on, it's not going to go on depreciation page 1 of 1065, but it will show up on Schedule K instead under deduction line 12. Any cash contribution will go on line 13A, and any expense related to investment will go on 13C, but any other deduction will go on 13E, and there is where your royalty expense, if you have royalty income, expense related to royalty will go under 13E, other deductions. And we have a folder here, we can click on it to see the broken down for it. All the other expense related to the income you generated, that went straight to Schedule K without expense taken out of those income. Under this section is where you put those expenses. You see deduction for royalty income will be here as well. So if you are receiving royalties, that is where you put your royalty expense related. And we can just go back. In this, we don't have any of those expenses, so we are going to get out of there. So now Schedule K, self-employment. So as you know, 1065 filer, you will complete Schedule K self-employment section line 14. Net income or loss from self-employment, we have negative 385 from 1065 page 1, profit or loss. And because it's not farming, we are not going to have anything there, but gross non-farm income is here, and this is 1065 line 3. That income there, let's see if we can take us back to Schedule K, is a non-farm income. So it will show up on 14C here for us against our profit or loss self-employment, because there will be a self-employment there. You are not paying yourself, you are not an employee. So we have self-employment information there. You have credit here, we are going to leave a blank. we have international transaction, we are going to leave a blank. And pretty much we are done here. So if this partnership has more than one activity at risk, we can just check that, and we will click save, and we are done with Schedule K. So now we are going to work on Schedule K1. So in fact, we can go to Schedule L and finish those, and then we can work on Schedule K1. So here we are now required to complete balance sheets, but we are going to complete it. So cash at the bank, let's go to here and see how you can complete your balance sheet for your business. So we are going to put this number as the beginning of the year. That's what we have at the bank, and at the end of the year 2025 December, and that is what we have at the bank. That is your cash level. So if you provide services that client have not paid you yet, you will put those on 2A. And if there is a bad debt, that means you know you're not going to collect, you're not going to be able to collect those payments. It will go on 2B. Inventory, well, we have our inventory beginning of the year, ending year, and this will become beginning of the year 2026 balance sheet, and that's the way it works. So we comes back here, our balance sheet, you can see is cost of goods sold, beginning of the year and end of the year 2025, which will become beginning of the year 2026 starting inventory. So let's go back here, and line 3, line 4, we are going to leave it. Line 6, other current assets, we are going to leave those. And depreciation here, building other depreciable asset, I'm not seeing anything here. Let's put some numbers there. So that is the total depreciation, total assets. So pretty much total assets that you purchase over the years for your business will go there. And if you purchase an asset in 2025, it's going to be this amount plus that amount of that asset you purchased in 2025 will be your ending total depreciable assets amount. And the amount depreciated so far like 2024 included, that will be your beginning of 2025 depreciated so far. So it's giving you how much you are left to depreciate, and you will include to that amount how much you are depreciating this year, which is like 707. If you remember, we come across it on our depreciation page 1 of 1065. So is included in this amount, and that is giving us this amount here, and is giving us that we have 648 left to depreciate. So if we come back here, depreciated so far up the way to 2024 is giving us 2870, and when you add 2025 depreciation to it, is giving us 3577, and then we are left with 648 from those assets to depreciate. So that's how you complete your balance sheet with those information for line 9A and B. So we have depletable assets, we are going to leave it. We have net land, net of amortization, we have intangible assets amortizable only, and here we have 37.99 already depreciated, and since we don't have any more, that will be the same, already depreciated, so this area will be blank. So if we go back, it follow the same rule here, but because it's not depreciable asset, is amortizable assets, you will put it underline 12A and B for it. So that brings us to our total asset ending 2025 to be 9,871. So if this total asset line F will be completed, that's what numbers will go there. It's going to be 9871 for ending balance. So we are going to complete the liability section here. We're going to come down here and we are just going to put those numbers as well. And the way it works, like if you are, let's say you have payroll taxes, you have now, deposited yet, it will go under your account payable section. If you have credit card debts, it will go under liabilities as well. When you use credit card to pay for things, and whatever you pay for is under the asset section, if you do not put that credit card debt under your liability as a short-term debt, you are going to be off here because you have more assets than you have income to pay for it. So therefore you need to put that credit card information somewhere here. If you have not paid that off yet, it needs to be somewhere here under your account payable or other current liability, whichever you choose to put that information in, you will do that. So we can copy. I think here is going to group it for us. So here we do not have, we have other liabilities. There we have capital, partner capital account. So here is not giving us like capital stock and retained earning. It's not giving us separately like that. So therefore, the way I understand it, line 21, partner capital account, I'm going to group both, and it's going to be 8096, 8096, 87. Let's go back here, and I'm just going to put it here. So it has a folder here. So it's taking us to partners. Okay, so let's do that. Let's open this and let's put that here. Times 0.75 is going to be 10. Let's see if we can copy this number here and put it here. Okay, and now let's go back. We might need to do that for this one as well, and this one is 25%. So let's go back to our calculator here. Let's do that. Times 0.75 is giving us what we had before, times 0.25 is giving us this. So let's copy this and put it here, and we will come back to schedule K1. So let's do that for now, and go back to here. So no, is not correct here. 80, 96, 87. Okay, hold on, let's do that here. Equal this times 0.75. Okay, equal this times 0.25. This number is different from what we put down there before. So what kind of calculation did we do? Anyway, let's go back here and let's go back again to partner 1 and let's put that number, and I think it should fix it for us. Let's go back. Yep, seems like it. So, and now we are having our total liability matching our total asset at the beginning of the year. So now we will come back here. We will have this number minus our loss. So this will be the same, but this will be this number and the loss for the year 385 in our example. So it's going to be 1339 or so. So we are going to go back here and here. Okay, it's taking us back here, and I'm not going to change anything here. It should be able to do this calculation for us. So if we come here, we do 385 times 0.75. Okay, that's what we have here, and it's giving us this amount here. So let's go back again and oh yeah, it's accurate here. So let's go to our things here and do this total. Yeah, 7,719 12 7712. So is yeah, it's correct here, and our total assets is matching our total liability at the end of the year. When you're doing your balance sheet, you want those to match. So, and if you have your, so you track your contribution to the business, and any profit or loss for the year will be added to it and will go on partner capital account. That's the way I understand this line here, and you have your balance sheet here. So now that we did the balance sheet, when we come to schedule M1, it's putting the loss there for us from page 1 of 1065, and ending amount for schedule M1 is that I'm not going to change anything there. We are going to go to schedule M2. So schedule M2 is pulling things from schedule L for us, is pulling partners capital account. So is analysis of partners capital account. So here is taking capital contribution and retained earnings. So is putting that beginning of the year there, and capital contributed during the year. If there is any contribution made from the partners, the total for all the partners will go under your cash section. And if there is a property contributed, like purchase and added, it will go there. Otherwise it will be cash, it will go there. And net income is from 1065 line, 1065 profit or loss came here as well as a negative amount, and any other increase will go there, and the total is 7712 as what we have here, ending balance. And if there is any distribution, it will go on line 6, and that will decrease the things here, and you will do the difference between line 8 and line 5, and that will go here. But since we don't have any distribution, then our line 9 and line 5 will be the same here. That is schedule M2. That is how it is completed. Now that we are done with schedule M2, we will move to schedule K1. So how do you complete schedule K1? We are going to click on the first partner here. So when you are asking yourself how to complete schedule K1 for your partners, is now completed separately from your form 1065, is a part of your 1065, is an attachment, excuse me, to your 1065. Therefore, I think it makes sense to complete your 1065, your schedule K, and from there you can complete your schedule K1s, because schedule K1s is the schedule K divided between the partners using their ownership percentage. So in this example, we have partner 1 that owns 75% of the business, partner 2 that owns 25%. So you take your 1065 schedule K line by line, and you will multiply by 75% for partner 1, and you will multiply it by 25% for partner 2, and the result from those multiplication will go on schedule K1. So therefore it makes sense to complete your form 1065, because if you put any number on 1065, it's going to flow to schedule K. If some income and expense will go straight to schedule K because your business is a passive one, then when you have those numbers on schedule K, line by line will be split between the partners that own this LLC filing 1065 using their ownership percentage. So when we go back to schedule K1 partner 1, line 1 per 1, line 1 will have the business identification number, B will have the business filing 1065 information, name, address, and we'll put where 1065 is going, IRS wise, and if it is, the final K1 will be checked, otherwise those things will be left blank, and D will be left blank because it's not publicly traded. Part 2 of schedule K1 is asking, select if this partner is a person or not. So this is a person, so it is an individual, but you have options there to choose from. And partner C, residency, is going to be Iowa, so we are going to choose Iowa here. And partner identity SSN, will put it there automatically. The software did it for us. Line E, that's that. Line F is asking for that partner's name. You have the first name, you have the last name, and that partner's address is going to be, let's just go with the same one we have been using for the business. And then we'll go to line G. Is it a general partner or LLC manager? Is it a limited partner? I check limited liability company member. So is it a domestic? Yes. So we check that for H1, and you have those. So is this partner active or passive? And this partner, if it's active, you check active. And then H2, is the partner a disregarded entity? No, we are going to leave those blank. So what is the type of this partner? For I1 is an individual, we are going to leave it alone. So J is asking about ownership percentage. Beginning of the year was 75%, ending of the year is going to be 75%. We are going to update those, and so therefore this partner is 75% owner of the business. So schedule session K1 we are going to leave a blank. And par L is tracking the capital account for each partner. At the beginning of the year, the partner owning, 6,073, and then we have, loss. We calculated that before. 385 times 75% will give you that. If there is any cash contributed during the year, will go under cash. 75% will go under cash here. And then we have any withdrawal. If there is a distribution, will go under cash. Otherwise, ending balance for this partner is 5784. And did this member contribute building up? We say no. We are coming back here, partner. We are going to leave it alone. This is a non-passive, so it's check. We are just going to leave it. So originally, business income is flowing there, and you see. So Schedule K is going to pretty much time every line times 75% for this partner and put it on the line as we go down. But because we didn't have any other number on Schedule K, those lines here will remain blank. So, and then we'll come to the next, to the self-employment earning loss section there. We'll go back to Schedule K. And that will be self-employment section here on Schedule K. That area we will see it on Schedule K1 as well. 14. So it pretty much multiply everything by 75%. I don't know if I recall what the gross income was. If it was this times 0.75, you can see it there. That's that. And this one we calculated before. So it'll put those numbers there, and I think that is pretty much it. But because we check more than one activity on Schedule K, we will have it here check as well for us, and that is Schedule K1 for partner 1, and that is how you complete it. The same thing will be done for partner 2, and we are going to put the address, the zip code, and we are going to, again, we check limited liability company member. It is a domestic. Is this person, so this we can say this person is passive. Let's change it a little bit. So let's say this person is not really working in the business, is passive. So we are going to come in. I think there is a states. Okay, residency is there already. Okay, so passive, we leave those alone. We have individual, and again, beginning of the year 25%, ending year 25%, we update those. So this person on the business 25%, we leave K1, K2, K3 alone. We'll come to schedule section L, beginning of the year. We have this 25%. If there is a cash contributed, 25% will go here. And again, the loss 385 times 0.25 is 96 negative, is going there, and the difference between the two is giving us 1928 here. If there is a withdrawal or distribution, it's going to go here for this partner. If it's equally, then that'll be a distribution will be 25 based on ownership. That'll be 25%, and that will be taken into consideration. M, we are going to leave that alone. N alone, and here you see, because we check passive up there, it check passive here. Pretty much what that means is any loss here cannot be claimed on 1040 against W2s. It's going to be carried over to be claimed against a profit from this business in the future. So therefore, is for the partner filing 1040 to know how to report those income and losses. So we can see again Schedule K line 1, it will be here. Everything is coming and so forth. And then you will see line 14 here. So line 14 here, because we chose passive up there, there is no self-employment. So the only person that is active in the business is going to pay self-employment. So therefore, income or loss will carry it here. So if we go back and we check that this person is active, and we come back down here, is moving it to non-passive for us, and you see there is a self-employment information required for that person, because if there is a profit, there will be a self-employment payment to make on that profit. And so self-employment earning or loss will be here. But we are going to assume this person does not work in the business. Only one person is working actively in the business. So therefore, this person is not going to pay self-employment income on his portion of profits. And in this case, it is a loss for this year. So this area is going to remain pretty much blank. So, and if you have a rental property, by default is considered as a passive activities, and that is why it goes on Schedule K straight. So therefore, if you do not have any self-employment information on it, because those two people owning the business are passive, you won't have any self-employment information to report for either one of those people, because there won't be a self-employment social security and Medicare to pay on those earnings if you do not have a trade or business activities that you are active on. So that is something to keep in mind. But if you are active in the business, you will pay self-employment in social security and Medicare on those. But if you have only rental property, do your due diligence on that when you are completing this area, because again it's pulling that information from 1065. It's pulling this information from 1065. So if you put information on Schedule K, oh, I thought I was on Schedule K. Yeah, it's pulling this information from 1065, page 1. But if you don't have anything on, and once we complete Schedule L, it complete Schedule K with that information for us, for total liability included on Schedule L, line 22. But yeah, so like if we don't have anything on line 1 and we have things on line 2 all the way down, I don't know if it's going to include it in a self-employment income section here or not. So if it does not include it here, and all partners are passive, or at least for the partners that are passive, they are not going to pay Social Security and Medicare on their income from the business, because again self-employment is from employment. People working actively will pay Social Security and Medicare on their earnings. So but here for this passive person, it's going to be left like that. I just like to have it like that, so we have both options to look at to see how it reflects on Schedule K1. And here again, because we check that we have more than one activities, is going to check it. So that is how your Schedule K1 will be completed. And when it's done, you send things and submit it to IRS. You make copy for your business. That copy will have Schedule K1s in it. You'll make copies from it and you'll give it to the partners, those Schedule K1. And technically, it should have QBI information, qualified business information. I will think it will be qualified for it. So we might have to look for it here. Schedule K QBI and Schedule K1 QBI. So let's click on Schedule K QBI. So Schedule K QBI, specialized service that we selected on 1065 is carrying over here for us. So go back to 1065. I think we check it here. Check if your business entity is a specialized service, trade, or business. So we check these, and so therefore for our QBI, if we can find our QBI again, has a checker for us, and then earning from 1065 loss, it put it there for us, and the wages, I don't know if you recall, the wages, payroll expense that we put on 1065, it put it there as well, and property that it think is qualified, it put it here. It will come from the depreciable assets. I don't know if inventory was involved, but it's coming from there. So we are going to just leave it alone the way it think it should be. Once you enter your things in it, the software should be able to calculate your QBI for you, and then you have for Schedule K, and that will be divided between the partners. So we can look for QBI Schedule K1 for part one, for partner one. You see, based on 75% ownership, everything got divided accordingly. 75%, that 217 salary times 0.75 give you that 163. 217 times 0.25 will, okay, 217 times 0.25 will give you 54 for the second partner. So it completes that statement A pass through for us, and we'll go to part 2. Again, this is doing the portion, the 25% of the loss, and then is doing that 54 for the salary, and and then the qualified property is doing 25% of that as well, and those will be on your, will be a part of your 1065, and you give Schedule K1 and Schedule K1 QBI to the partners as well. You'll make copies from it and give it to each partner their Schedule K1 and their Schedule K1 QBI for them to file their 1040. And as you are filing these things, if you are a tax preparer, keep in mind that there is a signature for e-filing. There is signature file. I'm not going to click on it, but I can point it out. It's going to be in the ADs. AD 453. I think there is 2 of them. ADA 79. ADA 79. E-file authorization for Form 1065. You have that, and you have the first one we come across, e-file declaration for Form 10CC5. Just keep an eye on those, that so that you check them. If you need to complete something there, you complete them with the pin, the client pin and your own pin before e-filing. But that is how you complete Schedule K1 QBI, Schedule K1. Let's start from the beginning. Form 10CC5, Schedule B, Schedule K, Schedule L and M2, and Schedule K1 and Schedule K1 QBI. So thank you so much for your time. Has been a long ride. So thank you. And 10CC5 is due by March 15 without the gray area whether it's a weekend or not. Because when it's a weekend, I think it's going to follow the next business day. But I just like to know the dates in my mind so that I don't have to check the calendar for it. If you are doing the calendar year, but if you are a fiscal year type person, your due date might be different. But just keep that in mind, that when it's due, and please try to file it on time and just get it over your plate. So that's because I don't know, that season can be a little bit stressful for me until I'm done with all of those, and I just want to see if I can share my knowledge with you, if it can make it a little bit easier for you to understand the process and give it a try yourself to see if you are willing to file it for your own business, to be able to file it confidently and knowing information that need to be that you need to have on hand to be able to file the form correctly and to the best of your knowledge, and submit it to IRS on time, and give Schedule K1 information to your partners for them to be able to file their 1040 by the due date of 1040 as well. So thank you so much for your time. We thank you very much for all your comments. Thank you for watching our videos, and we thank you very much for subscribing to our channel. I'm Afiavi, Liberman, Goddess of Liberman Consulting, L.L.C. YouTube channel, and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And filing your own business tax return is one way to keep your business expenses low, as your business is still young, to focus, to spend that money more toward things that is making money for you. And at the same time, you are learning how to track your financial data, so that when later you delegate this work to, you outsource this work, a document to give that person, for that person to be able to file the return for you accurately, because after all, we are going to sign that return. So that means you are responsible for the numbers reported on your behalf, whether they are accurate or not. But you'll help the person filing it accurately for you if you track your information, your financial information, well enough to help them to file it accurately. So thank you so much for your time.